that candle is probably a really interesting kind of thing to a lot of people. And I'll tell you why. A lot of people who were short on gold, this would have been called a fake out, okay? Right? What's interesting about fake outs is that it does two things, okay? A fake out traps buyers, and it also really hurts sellers. Let me show you why. Think about people who were short here, 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 right? When price rockets up like that, what does it do? It hits all their stop losses, right? So you have a fake out slash a stop hunt, right? So when you have gold moving like this, when you have a major push to the upside, all of a sudden, really, really fast, then all the people who were short, right? The shorts in this market, and I'm not trying to pick on anybody if this was you, right? I'm not saying that you're stupid for this, but if you had large positions, right, then this was obviously a very, troublesome thing. When the market rallied very, very hard, very, very fast, very quickly to the upside, a lot of people who had stop losses were getting stopped out like crazy, so which causes more people to be buying, right? When you stop out of a short trade, you buy back, you cover your short. So you had a lot of buying pressure due to the people getting stopped out. And you also had a lot of people who were buying the highs, which is called chasing the market. Right? People who are chasing that price as it moves very, very bullishly, right? So you had buyers in here who were convinced, it's going to keep going, it's breaking out, we'll see that major push to the upside, right? And so you have what you call a fake out for the buyers, right? Buyers, they were like, oh man, this market faked me out. It went back, it reversed very quickly, so I got faked out. And then for the sellers, you have a stop hunt, right? Because these people were short, their stop losses were up here, and they got tagged just before the market turns back. And that happens all the time. That happens in markets because a lot of times the market gravitates towards where the order flow is, right? So, if there's a bunch of orders up here, the market naturally tends to drift up there. And then when we find a lot of institutional or bigger money pushing back down or selling it off, you can see we did in fact get that big fake out where the market reversed and went right back to where it started the day at, which is, potentially an idea of, well, there's a lot of sellers in this area. So what does that mean? Well, it could mean that we see a pullback here on gold. So reading into the price action, reading into the kind of story that price is telling us may give us some clues of where price may want to go next. All right, so the idea that I have there is that we have this big extension. We have a big fake move to the upside that very quickly reversed, right? So that would be called a fake out, or again, a stop hunt. And the idea being that we could see a bigger pullback here to an interesting level like 1550. Right, so we broke bullish above 1550, but the market often likes to retest areas that it's recently been at, right? The market doesn't move all the time in straight lines, right? The market moves back and forth and does all sorts of crazy stuff, right? So as we see this sort of thing where we have a big pin bar or a big kind of fake out candle, what that could mean is that sellers are entering the market heavily, right? People who were short are getting stopped out, which means that they were buying. So you had a lot of people getting stuck in buy positions before big money comes in and stops them out, takes their money and reverses the market. Unfortunately, that sounds mean, and it's because it is, right? The markets are not a nice place. The markets are not a friendly place. It's not a place where everybody just gets to make money for free. Unfortunately, the truth about markets is that if one person is making money, someone else is losing it. And if somebody else is losing money, the other person is making it, right? So to every loser, there's a winner. To every winner, there's a loser. And you have to think about, well, who's on the other side of this trade? Who's trading it in what way? And that's where sometimes people talk about banks and institutions manipulating price or pushing price one way just so that they can take it back, or, things like that. And so you have to be at least open to those ideas. It comes down to whether or not you believe the markets are manipulated. There's good arguments for both sides on that, so definitely something to at least consider. To me, I like to be cautious about the idea, though, that when people say markets are manipulated and that you can't win because they're just manipulating price all the time. Well, to me, that very well may be the case, but it doesn't give you an excuse not to find a way to still trade profitably, if that makes sense. So if they are trading and manipulating markets, then what does it matter, right? The whole world is to some degree, right, run by different people, and things are happening, and you call it manipulation, or you can call it just people trading the markets in the way that they have found to be profitable. So instead of just saying the market's rigged, it's you can't win, right? My idea is to be careful about that sort of way of speaking, because then it sounds like you're giving up on it, right? And so if it is manipulated, then find ways to trade anyways, right? Come up, be crafty, don't use that as an excuse not to find strategies that work for you, not to trade the markets, right? That's my personal opinion. Again, up to your own discretion on that sort of stuff.